what we see around the place now, and we hear enough, is that there's a race to quality and a race to confidence, which is more important in that space. If we've got financiers and developers and consumers all asking the same question, then we all end up with a better result than the government telling us we must go that way.
So we've spent the day talking about latent defects insurance. We've had views from developers, project marketers and funders. Now we get to speak to the brains behind the insurance. Stefan Hicks, co-founder of Resilience, CEO Corey Nugent. Thanks for taking the time to have a chat. Why don't you tell me a little bit more about the product and kind of how you brought it to Australia?
It wasn't in Australia to begin with. So what we actually did is that we've always been involved in the construction market, and we're one of the largest doing the home warranty product. But we knew that the home warranty product was extremely undercooked when it came to consumer protection, and as an insurance policy or an insurance cover, it was really lacking. So we were always looking for additional covers. And it just so happened that obviously I was living in the UK at the time and putting out the feelers to find out if anyone was interested in providing latent defects in Australia, not just for that sort of home warranty class 1 piece, but for the larger class 2, and also we also do classes 3 to 9. But the noise in the market was obviously coming to a head with Mascot and Opal Towers and whatnot for the class 2. So the timing was very good as far as that was concerned. So I put the feelers out through my markets in the UK and ended up in France, where one of the large reinsurers took an interest. And then we went from there, but it probably took us a good 4 to 5 years to get it on the market here in Australia.
And what's the mandate back in the UK and kind of Europe, and what's the policy been there, and how does that compare to what it is here?
The mandate, well, LDI operates in 40 countries around the world, and it's been going. It's not a new product line. It's been going for 70 years, so it's well known throughout the world, and many places make it mandatory for buildings because it offers on so many different parts of the scales with developers, consumer protection, financiers, right across the board. It adds all the positives. So it was only a matter of time when we started looking for it in the UK. The timing was that they were going through building reforms here in New South Wales, and it just knitted in very well with our discussions and our advisory talks with the government about bringing in a private insurer into the market on that basis. So that's the not quite mandatory here yet. It is moving towards that, and because it does extend consumer protection way beyond where it is at the moment. But it's only a matter of time before it becomes mandatory here in Australia.
Yeah, it's sort of moving towards that direction, I guess, that if you look around the world at different markets, some of the more mature markets like France, it is mandatory. And there's a whole set of rules. If you look at the UK, it's not mandatory, but it's still involved on every building because the financiers and other areas of the market, the commercial transaction, require it. And I think you're going to find that here, that while we have different states move towards mandatory or quasi-mandatory schemes, that you'll find the industry is looking for that arrangement where it will become the norm quite quickly, as opposed to government needing to regulate that it is required, which will be a positive thing, I think, for the industry. I think what we see around the place now, and we hear enough, is that there's a race to quality and a race to confidence, which is more important in that space. If we've got financiers and developers and consumers all asking the same question, then we all end up with a better result than the government telling us we must go that way.
Yeah. And how's the uptake been for financiers here compared to kind of the financiers you've spoken to in UK, France, other different markets? What are they saying to you guys and developers about kind of the, I guess, appetite to lend to LDI-backed projects?
Absolutely. It's been really important. I think, again, to what Stefan was saying, that this has been a journey over many years to be able to build that conversation. And like we're now speaking with lenders locally, international lenders as well, that are coming into this space and funding and capitalising different lenders here. And we're finding many more of those funders supporting larger developments are either requiring, some are mandating, but some are certainly providing beneficial rates, for example, to developers to take the product out because of the de-risking through the project, the additional inspection programs, the oversight and managing quality at the time quality needs to be managed, as opposed to looking at things retrospectively and saying it would have been good had we picked that up. So lenders are really starting to see the value in that space.
And I guess you've kind of come in at a time, it's probably been, 4 or 5 years, let's say, that you've been kind of rolling this out across New South Wales and the rest of the country. How important is it now for the off-the-plan buyer or the new apartment buyer compared to probably something you go to 1980s, 1990s built buildings and apartment buildings, and they're rock solid? Sydney, probably more so than any other state, went through a period where they weren't. And I think the new market is probably still reeling from that a little bit. How much do you guys see yourself fitting into that and saying, well, if these projects had LDI, this wouldn't have even happened?
I mean, we can postulate about those with different building failures and defects on other projects forever. We can always find a reason that this shouldn't have happened or couldn't have happened, but that's not really the point that we need to get to. What we're looking at is a confidence position to say, what is it that is being built and how do we avoid the issues of the past into those new buildings? I guess if you've got an existing building, sure, there hasn't been any catastrophic problems in that building. One thing you don't know is you don't know what you don't know. Right? You're buying something, when you move into it, you're likely going to look at something, a new kitchen, a new paint job, a new roof. It could be anything in that space to get it to a point where you're happy. Buying off the plan gives you the ability to find what you want. But the confidence aspect that LDI brings is a critical point to this, that it is inspected during the construction. You do have confidence that it is well designed and constructed. But more importantly, you've got the insurance off the back of it that lends to that point, that if all of that is wrong, you do have that insurance protection that builds that. The point that's most important in that is we have an existing stock of properties that is so big. The existing stock is not going to grow. It's only through new stock that we're going to be able to house people in that space. We know that 50% of Australians are going to live and work on the eastern seaboard over the next 10 or 15 years. Where are we going to house them? We can't house them all in existing stock. We're going to need to build new stock, and we're going to need to build it at high rates to be able to do that efficiently and effectively. So LDI lends heavily into that piece to ensure that we do that work and house those people at an affordable rate, but with the confidence that it's well built and designed.
And can you guys explain a little bit about the first right insurance and kind of how that works for a buyer as opposed to second right insurance? Is that kind of what it would be called?
The first resort.
First resort. Yeah. First resort versus last resort.
Right. Well, first resort. Well, at the moment,
You've got class one it's mandatory, literally around, or legislative, around Australia, that they've got to take home warranty, or in some places called home indemnity, and that's mandatory. So, but it takes out, it's a 6-year cover. The sum insured's capped on it. Basically, everything's capped on it.
It's ineffective.
Yes, it's completely ineffective. So the LDI that's coming out is over and above the wording, the coverage. It gives the consumers, it gives the developers, it gives the financiers so much more cover than what the first resort scheme does.
Yeah.
First resort scheme, it's called first resort because basically the triggers on first resort, which is home warranty, are basically death, disappearance, and insolvency, which is the big one.
Yep.
So what LDI brings to the table is that you don't need those triggers, right? The actual trigger itself for LDI to make a claim is the defect itself. Yeah. So it's basically, you don't need to go through all the hoops or additional hoops in order to lodge a claim.
Yeah. There's no who did this, I didn't do this. Not
No,
my
you
problem.
take that completely out. I mean, if you're looking at that proposition, and Steph's point is really well made in that place. I know, using New South Wales as an example, and I'm only using that because that's where we are now. If you look back a few years, there was many thousands of complaints related to defects on properties to which the last resort scheme would or should have applied, depending on how it's structured. There was only a very small percentage of those that were actually able to get support through the scheme because their builder had either become insolvent or one of the other triggers had occurred, which is disappointing to start with. It shows how ineffective that model, if you like, or the philosophy of that model is. But what you've got to ask yourself, and when we're talking about confidence and the like in people buying property, the 90-something% of people that couldn't get access to that scheme because their builder was still around or one of the other triggers hadn't occurred, what did they do? They either had to sue somebody, they had to pay for it to fix themselves, they lived with it, or they sold it on to be someone else's problem. It's an ineffective program when the owner or the beneficiary of that insurance product is unable to access it because of a third-party issue. As Steph said, in the first-party proposition here, when the defect occurs, that's when the claim is triggered.
And then in terms of the policy, really popular in New South Wales across the board. We've spoken with Daycore and Property Group, some of the biggest developers here. What's the plan for Victoria, Queensland, Brisbane, Gold Coast, those areas that are going to have a lot of supply and are going to need a lot of supply to meet population growth? What are developers kind of saying there?
We initially entered New South Wales is because they were going through their building reforms. So they were allowing basically a clearer path for us to enter with our product. And there was some, obviously, they were making a clear path to attract private insurers into the market. So it was easier for us to enter New South Wales initially. And we're now speaking with other governments, and the other governments are talking about building reform and changing those particular aspects that actually made it easier for us to actually enter those particular markets. So once they occur, I mean, we can still write business in every state. We still write business in Queensland, Victoria, and Perth, right around Australia. But it makes it a lot easier for us to do it a little bit more en masse, so to speak, once those particular building reforms are actually made. Some states are ahead of others. Some states don't need to do it. So it's all a little bit different because the state governments are particularly different in the way that they treat these building reforms. But it was definitely the building reforms and our position with the state government in which they wanted to attract private insurers into the market for this particular aspect in order to increase, as Corey said before, the confidence in buying apartments off the plan or whatnot, because that confidence had been eroded due to 20 years of basically not policing that particular market. So yeah, we will actually, we do operate around Australia, but it will make it a lot easier once other states catch up a little bit more with their building reforms.
Yeah. And I think in terms of the developers who are working with you guys here, from what I understand, once they've got LDI on one of their projects, they've got it on all of their projects based on the feedback they're getting from buyers, project marketers, what people are saying, the increase in sales rates, increase in sales prices in some scenarios. So once they've kind of got it, they've built it into their feasibilities for the next project and the next project.
Yeah. We've been watching that quite closely, Joel, over time, and you're dead right that when we've written an LDI program on one development, we've found that developer coming back time and time and time again. In fact, one or two of them come back with a couple of projects at a time. So it's really been positive from that point of view. Something that's new is always something that needs to be educated, learned, and the like. And we've run through that program, as Stefan said, for a number of years now with a number of developers. But those that we're talking to now that are returning are seeing the benefit in many different areas, whether that's the additional QA that will exist on the program with the TIS, that they've got an additional set of eyes on the program that helps them, gives them more security. There's the funding de-risking. There's the confidence for consumers and those sorts of things. But what we have seen, as you said, was the increase in sale price that those developers are absolutely seeing in that sales pipeline, faster sales. It's not just an increase in X percentage. One of the things that developers love to see is the speed of sales. So they're selling quicker. So that's an important point. We're also starting to see and hear now with some developers where, because of the LDI program, that they're getting better commercial arrangements from their funders. That might be rates, that could be terms, it could be covenants, it could be anything, but they're getting preferential arrangements on some of that funding, which again goes to support that. So when we talk to LDI, and we've heard this around the country in many areas when you talk about governments, if we don't want to increase the cost of building or the cost of sales, we would agree with that. This product is not in fact adding to the price. There is price benefits here because they're saving on funding, they're increasing the sale price. All of these things fit into that space that the use of that capital is much more efficient.
And I think the interesting point with LDI and its cost, if it's somewhere between 1 to 1.5% of the build cost, call a build cost $100 million, 1% of that, $100 million.
Yep.
If you can pass that 1.5% to your buyers, who, based on research that we've done, 70% of people are willing to pay another 1.5% onto the standard price of what they're going to buy, LDI. You're actually not only offsetting the cost of LDI, you're making profit. Right.
The developer absolutely is
anything above that will be, it goes to the bottom line.
Well, that's the important point. But what we're seeing now with that funding position is, yes, we sat there and we said, yes, if you can pass the 1.5% off, you can get a higher price. At the end of the day, the cycle is, well, someone's paying for it. What we've found is that that's slightly changing, that it's not the consumer that's paying 1.5% more, whilst they'd be happy to, if they're getting preferential rates on their funding as well. If those consumers are getting a benefit off their own funding, then it's a saving to them in that point. It's actually not costing them that money, that they're getting the additional security, the confidence, the comfort of having a well-designed and built building, but they're not paying that extra amount into that space.
And then there's also kind of the increased resale, potentially, of that apartment. The new purchaser that comes in, if you decide to sell your apartment within 1 to 5 years, you pass on the remaining 5 years to that new buyer.
We see it quite frequently now with a number of developers and project marketers, for example, that are asking the question or reporting that they're being asked the question much more frequently, does this property have 10-year latent defects insurance on it? So it's becoming more frequent at that point. That will continue. It won't drop off at any point soon. If you're out buying a dwelling in that space, and it will change your thinking of the opportunity cost of what are you prepared to spend on property A or property B based on the security or the knowledge of what you're purchasing.
And I think there was an education piece probably 12 months ago where people would say, oh yeah, I'll take that insurance out. You can't. It's not like home insurance. It's not like car insurance. You can't just say, I'll take it for my apartment. It doesn't work like that. Right?
Well, it's not in singularity because you obviously, change the walls and just to ensure that, but you can't take it out in retrospect either. Yeah. So those buildings that have been built are unfortunately still going to have to go through all those particular maintenance programs and owners. But the whole point about the building reforms and whatnot is to actually, draw a line in the sand and say from here, going on forward, we're going to focus on quality and we're going to address those issues that affect affect those sales and those new builds.
Awesome. That is Resilience Latent Defects Insurance in a nutshell, I think.